Yes, my name's Robin Dunbar. I'm the president and CEO of Grid Metals, located in Toronto. We're a Canadian-based junior exploration company, which is currently focused on our lithium project in southeast Manitoba, and we're moving that project towards production as soon as possible.
You are, and you're doing it in an environment where lithium seems to be making a resurgence. If any of the conversations and interviews I was party to recently in Quebec or anything to go by. You, though, are very serious about getting into production in 2025. First thing you're going to need, some permitting in place. So how's that progressing?
Well, the first thing we need is a resource and permitting, and there's a lot of things we need, but we're moving forward on all of them. So permitting, our approach to permitting is the last mine that was permitted in Manitoba was done by way of an advanced exploration permit followed by a mining permit. And the reason it was done that way is because it was the Reed mine. It was really a toll milling operation that Hudbay did. And we're looking at the same thing where you don't have to build your own concentrator, tailings, that type of infrastructure, which is hugely expensive, probably in the range of $300 million and will take 5 to 7 years. So what we're looking at is a toll milling operation where you're permitting your mining, your extraction, some infrastructure, but then sending it to an existing mill. So the first permit we need is an advanced exploration permit for a bulk sample, and we will be submitting that very soon. It's completed. We've run it by both the First Nation that we have to consult with in Manitoba and the Manitoba government. And, we had some positive feedback from both, so we're going to be putting that in. We hope to have that by the fall. And then this will enable a bulk sample. And then following that, we can apply for what's called Environment Act license in Manitoba, which is, when that gets granted, that's your mining permit.
And remind me again, because obviously you're trying to manage not just the potential cash flow from the bulk, but dilution that obviously which would be great. Well, how much of this bulk sampling can you do? How much can you sell, and what do you kind of net off the back of that?
Yeah, the amount that is in our permit is about 40,000 tons, and we don't actually expect to make revenue from that. It's kind of an unwritten rule, but what we'll be doing is sending most of that to the Tanco mine and running it through their facility there. They have an operating lithium circuit, and that'll, give us the recoveries and, some estimate of cost and, how it fits and that type of thing. So that's, it's really the exercise in determining can you process this effectively at the Tanco mine. Yeah.
No, I understand that, but it's again, when we talk about bulk sampling with other commodities, other companies, they do expect to be able to at least recoup their costs or even make a little bit of money. Are you saying that you're not allowed to, or your expectation is that you won't?
It's really the unwritten rule in Manitoba for bulk samples. Now, Tanco will pay for half the bulk samples, so that will certainly help.
That will certainly help. Okay, so there's an exercise of data gathering for you, but you won't necessarily bear the entire cost of that exercise. Okay, that's okay, fine. And then the end game, obviously, with the toll milling agreement and Tanco further down the line, is that they will process an amount. Have you got a sense of what that needs to look like? Because you've got to manage the kind of growth process yourself, and so what does that look like?
Their current mill is around 200,000 tons per annum of ore they can process. They do some upgrading, and we expect to be, most of that of their capacity. So, we're still working on a binding agreement with them, but they've been very consistent over the years. They've announced plans to build a larger concentrator, 1 million tons a year, and that they want to source ore from our surrounding companies. And we're the only company within, several hundred kilometers that has or will have a resource, and we're well ahead of anybody else in the area. So we're the logical candidate. So
okay, you need them, they need you. You've you have in terms of that kind of controlling dilution, etc., and being able to advance projects, you have kind of got this. You got lithium royalty involved, right? They're sitting at 25% of the Don Lake project. So that is. And do you have any kind of buybacks involved there, or have you kind of given away some of the upside down the line?
We've given away 25% of the project, but they have to fund 25%. So, that helps to defray the ongoing capital costs. So, at some point, would they be interested in selling us the project interest? I think so, but that remains to be discussed.
Okay, and let's talk about this. When you kind of come on the show in March, and you talked about obviously the Tanco, you were talking about drilling at lithium in pegmatites, which seems really hot at the moment. There's a few companies which have just shot out of the gate hundreds of millions of dollars generated. People are excited about these kind of lithium pegmatites at surface. You haven't been party to then a commercial activity or that kind of response in the market. Why do you think that is?
Well, a couple of reasons. The biggest success has been Patriot Battery Metals in the last couple of years. They have some phenomenal intercepts. Looks like it's going to be a huge resource, world class. And so I think that stock is extremely well. Our drilled widths are much more modest. So maybe that's not what investors think they should be looking for. But our approach is that many projects that people think will be coming on stream soon will not be. So I think that there's 2 producers in Canada now, and if we're the 3rd or 4th and we start making some money in this high price environment, that's going to be make us stand out, because at the end of the day, you're either going to get bought out, make your shareholders money, or you're going to start making cash flow for your shareholders. So that's the road we're going.
Okay, so you understand where you kind of fit in the marketplace, and you're sort of driving towards that timeline, but also insert yourself into the kind of producer category, which I guess that gives you a kind of re-rate at some point down the line. Now, let's say there's a few things to do before there. One of the things, the first thing you said today was, okay, resource estimate. So timing for that, are we clear?
Soon. Yeah, within a month, for sure. All the we will have that soon. Yeah. And what we're gonna do there is that resource is going to be presented by kind of a near surface open pitable portion of the resource, which can be fairly easily extracted, perfect for toll milling, and then the larger kind of global resource, which would include the underground portion. And we're going to be focusing on a good grade, a resource, so well over 1%. So we think that will be pretty robust in today's price environment. So that's our goal there. We announced our metallurgy today as well, and had good recoveries on the lithium. So that's another tick in the box for the project. So we're moving all these things along.
You are moving all of these things along. With regards to Canada, the mining environment for Canada, you're talking about how many companies are talking about their own lithium projects and how many will kind of get into production anytime soon. Now, it's been a very difficult and capital constrained environment for companies to operate, whether they're kind of trying to fund plant builds, etc., or quite frankly just to survive. It seems. The Canadian government seems to have issued a lot of initiatives around green metals. Again, are you trying to work out where you kind of fit in that ecosystem, given you're talking about a near-term production profile?
Yeah, no, we're certainly exploring avenues for government support in what we're doing. And the flow through regime for critical metals has been important for us to get a premium on the stock that we issue that's focused on exploration. There's never any guarantee on government money, so we don't, we're not counting on that, but we have some things going on that we think, would be really appealing to the government in terms of funding some of our activities. So, that's an ongoing area of focus for us.
Yeah, because I think someone actually sent a note in with talking about Sinomine said teaming up with LG to speak to the Canadian government about expansion and new concentrator by end 2023. So there's a lot of activity in country. Are you sort of conscious that the environment's getting a little bit easier or a little bit more interest in terms of people moving upstream?
Yeah, I think what the real interest that I see in the market is if you're a company that can actually produce some spodumene concentrate and be able to market that, that's what the battery makers are looking for, so that they can harness that concentrate for their the chemical plants, their hydroxide plants. So that's what, as a junior, you want to be able to say, okay, I've got some a stream of spodumene concentrate coming on, in the not too distant future, and there's some really exceptional upfront payments being paid by the companies, equity investments. So as you get nearer to your project coming into view as a producer, there's more and more funding available from the industry that's looking to secure your offtake.
It's a very interesting environment, obviously in the backdrop of geopolitical conversations, slightly anti-China rhetoric coming out of the US, and then in terms of people moving from just-in-time strategies through to inventory-based strategies, and a kind of this whole desire, I guess, with this anti-globalization conversation going on, like people to take control of their own supply chains. Do you feel that more and more of this money that you just talked about being available to explorers, pre-development type stories being made available, is that going to be good for the industry as a whole?
It'll certainly stimulate investment. And we found, even as a small junior, that we can access capital for what we want to do. And we're very much still an explorer. We're just taking the opportunity to try to, get into production fairly quickly, that you can take advantage of the high prices. But longer term, you want more and more resources, bigger resources. So, we don't see any actual capital constraints right now in terms of the market. As you move towards production, you get into capital costs, you're in the tens of millions of dollars. That's more of an issue. But I think, what we see is there's a lot of interest there as well. So I think the market's here. People shouldn't be surprised when, the lithium price goes up and then, 10 times and then retraces. That's just the business. It's kind of the new business. But if you look at the price of the ore now, it's $800 to $1,000 a ton of the grade that we're looking at in the ground. That's phenomenal. And, so that's a price environment you want to take advantage of if you can. So, yeah, there's a ton of interest right now. And, there's also, more and more companies. So there's a lot of noise out there. And there's obviously some really good ones. And each company has their own strategy. And we're trying to, find our way. And, we're fortunate, even though the Tanco mine is owned by the Chinese, they went through Investment Canada review. They employ 100, people there. They produce spodumene concentrate, which goes to China. But what people don't realize is that all the spodumene concentrate currently produced in North America goes to China. There is no commercial processing facilities for spodumene in North America currently. So that fact is, I think, overlooked. And even Tanco has indicated they want to become a North American supplier. So I think that there's a pivot happening in the industry, and our opportunity for toll milling is created by the fact that we're right next to the Tanco mine. And on the exploration side, the Tanco mine was one of the two world-class pegmatite finds for many, many years, that in Greenbushes in Australia. So it's a world-class environment. It's highly fractionated, the most fractionated in the world, which means it's got a really high-grade lithium zone. Our exploration property, the Falcon West, which is south of there, but still in southeast Manitoba, we put out some results on that. We've got a kilometer-long zone, high-grade spodumene, high-grade cesium, really fantastic exploration project. So, the point being is the terrain in southeast Manitoba where we are is really, really prospective, and there just hasn't been very much exploration. So, we're looking at it. This is a long-term effort, but if we can start and make some cash flow and fund it, then we'll be a long-term player in the business. And, you know, we're going to see ups and downs. There's going to be another trough, and how many companies are going to fall away when that happens? Well, we'll see. And, you know, we want to be a survivor in this whole thing.
Right. That sounds that you might be skeptical about some of the stories out there and their ability to actually get into production. And I kind of, it's reflective of a conversation I had days ago with a consultant in the critical minerals space to U.S. government and others, which kind of reflects your view of this. He said, you know, sometimes people forget the job of these CEOs is to actually get a mine into production and produce cash, but all too often, it's about 70% was the number he quoted. That's not the name of the game. So, with that in mind, your conversations internally about the speed at which you moved and the strategy around, look, let's get into production and produce some cash at a scale, and then we'll come back to or greatly enhance the exploration component and potential for the growth of this company after that point. It was as simple as that: money first, and then build it out.
Yeah, I mean, we're still doing exploration as we go. So, you know, we're certainly allocating somewhere now on our second full field season. We concentrated on 2 pegmatite dikes, and I think we have like 3 or 4 others that, you know, we think have potential. So we're doing the field work on those now. We'll do some more drilling on those in the fall, and also when we get through consultation on Falcon West, we'll drill that. So, you know, we're talking, you know, $500,000 to $1 million a target to see what we're talking about. So, you know, manageable for us. But you have to, you know, walk and chew gum at the same time, right? So you just have to balance the where you get the best bang for the investor's dollar. And, you know, we haven't, you know, drilled into 50, 100 meters of you know, 2%, you know, pegmatite like some people have. But, you know, our resources are, you know, if you get in a car from the Winnipeg airport, it's less than 2 hours. You can drive right there. Fantastic infrastructure, great place for a resource. There's already a mine. There's a workforce. So it's a really excellent location for a project. Falcon West is like literally several hundred meters off the Trans-Canada Highway. So, you know, our projects have a lot of advantages, and, you know, because we're looking at toll milling to start, we just need a few million tons to get going that you can easily extract. And, you know, at $1,000 a ton, you know, a couple million tons is $2 billion of revenue. That's huge money. That's why people are interested in lithium, because the margins right now, and you see that with the majors, you know, the big guys, the big trading companies, they're trying to get involved in the business because they see 5 or 6 years of when the prices of lithium is going to be, you know, quite inflated, and you can make outsized profits. After that, you know, who knows, right? The price could go down, it could go up, but that's where those big companies are putting their bets. And for us, if we can take advantage of that price window in the next 5 years, you know, that'll be a great outcome for our shareholders. Most companies, if you got to build your own plant, concentrator, tailings, you're not going to make that 5 or 6 year window. So kind of all bets are off. So, you know, it's an interesting dynamic right now. We have our strategy. We want to find the big one. We're in a great terrain to do that. But we also think, you know, we have a unique circumstance and ability to, you know, try to make some money, you know, in the near term.
Okay. I 100% buy that. Also, the other thing is obviously acquisition. Now got PGEs in the portfolio, well, nickel and copper as well. Why did you do that? Why stay focused as you just outlined on the lithium?
Well, we actually had the copper nickel project previous to the lithium. We like that project. It's going to take more money. We are doing some work on it. We've acquired a significant amount of ground that's, you know, covering the right rocks. You know, we think that, you know, nickel long-term is going to be a, you know, very good metal to be in, same with copper. But that's going to be, it's going to be a bigger project. We need to make that project bigger. You know, we've got 40 million tons right now, probably need 80 or 100. We think we can get there, but that's going to require, you know, time and money. And we looked at the opportunity for, you know, our company, where do we get the best bang for the buck? And that's short term is in is in lithium in this strategy that that we're undertaking.
Okay, so I was talking about the gas and resources deal. Was that was already in existence, right? Okay, interesting. Okay, fine. Well, I will obviously have to go out to read up on that transaction. Thank you for your update on the lithium. Like the strategy. We will stay in touch with how you get on with regards to the permitting and more eminently resource estimates. So appreciate your time today, Robin. Thank you.
That's right. Yeah, thank you very much, Matthew.